We are just a few minutes now from the opening bell. Not much change in the futures here this morning, but gains will put us back at records for the S&P 500 at least. NASDAQ is close to those levels. Ryan Dietrich is with us, LPL Financial Chief Market Strategist. Any obstacles in the path of upward momentum here, particularly as we head through June and what feels like a pretty quiet month, Ryan?
Yeah, you talk about quiet. I mean, think about this, 16 days in a row, the S&P 500 is not traded in a 1% range. All right, you got to go back like 2 years the last time we saw that. So the obstacle you could say is things are just really kind of boring, right? There's no volatility. Then we'll complain when we finally get volatility. But I think one of the near-term obstacles is simply the calendar. Looking back historically, the second half of June is actually one of the worst stretches of the year. So there's all the Fed, inflation, earnings, all that stuff's out there. I get all that. But again, don't ignore the calendar here where June, I know we just made new highs. One other worry of mine, we just made new highs in the S&P, but we did not have many stocks make new highs. We've got a lot less stocks making new 52-week highs than we did a couple months ago when we were making new highs. So that's not an end of the world scenario, but it is saying maybe not as many stocks are participating in this, and we could just be more of this choppy sideways range where honestly we've been for a couple months now.
Yeah, we've seen that range-bound market, and certainly the memes became a part of this story over the last couple of weeks. Got about 30 seconds here until the opening bell on this Tuesday morning. Again, we got that retail sales data out earlier this morning. Sales falling more than expected from April into the month of May, but you go through the categories, you see auto sales really cooling off, and you see spending at restaurants and bars going up as expected. And we see here live pictures from the floor of the New York Stock Exchange. Defiance ETFs ringing the opening bell on this Tuesday morning as we get today's trading underway. And as Ryan was kind of outlining there, been a sleepy market, and futures certainly pointing to a muted open. And, Ryan, on that point, we were chatting earlier in the show about the rotation kind of back into growth out of value that we've seen. And it got me thinking about this idea that the market is sort of seeming to revert to what worked over the last decade. And over the last decade, as you know, a defining feature was low volatility. And I'm curious if you guys are starting to think about this idea that maybe the next 5 years in the market kind of look like the last 5, and we take this COVID period and just sort of block it out.
Yeah, well, let's be honest. The next 5 years, we do think we're in a major structural secular bull market, so we expect higher prices. But the truth is we've had some weak economic data. Like you said, just this morning, we've had some weak economic data on retail sales and Empire State. But yet, what's happening? Stock market's flat, yields are flat. We're still in the camp, though, Myles, that for the rest of this year, the value will outperform growth. This is just a little blip in our opinion. I think the economy is still going to improve here, and we still stick with value over growth the second half of this year.
Ryan, I know you can't talk individual stocks, but this Hindenburg report on DraftKings is really disturbing. It's not the first one from them, and it's not the first one or first time a short seller is attacked some of these hot stocks. As you take a step back and look at the market more broadly, is this type of report or is this type of thinking on these high growth stocks a sign there's just too much exuberance in the markets and it needs to be stomped out quickly?
Yeah, that's a great point. I mean, there very well could be. You got the meme stocks and some of these other ones you're talking about. I mean, look at the AAII number of bulls we've recently been seeing in that survey, some of the lowest numbers ever. Put to call ratios are very low. So there's just a lot of optimism. I mean, guys, the S&P's made new highs 3 days in a row. Today could be the 4th in a row. You haven't seen that since the middle of last year, right? So it makes sense people are optimistic. But again, looking at seasonality, maybe a little too much optimism. We maybe need more sideways, kind of frustrating market, and maybe some pullbacks in some of these high flyers to kind of squeeze out some of that exuberance that you just mentioned there.
I mean, to sort of dig into this a little bit, because again, you're good at looking at market history and the sort of underlying technicals of the market. I wonder at a time like this when the volume is not very high and you see this kind of exuberance and you see these kinds of records, what conclusions we could potentially draw.
Yeah, well, I mean, again, it's normal for summertime, right? Summertime, you tend to get light volume. Everybody's getting out of school, so we're not super shocked by that. And you look at the overall volume, most of it's these meme stocks, it feels like anymore. But still, what can happen historically in the summertime? You can get one big event, whatever that could be. Maybe it could be the Fed. Something could happen that can upset the apple cart when you have light volume, and then you get that big volatility. I mean, the most volatile months historically can be June and August, all right? Summer months, we're on vacation. But again, volume is light. So you have to kind of be very aware of that. And honestly, we haven't had a 5% correction, since late last year. So we're probably due, well deserved, for some type of a little bit of a modest, more of a modest pullback in these historically kind of choppy summer months. We think that could be the play here.
Yeah, and Ryan, you mentioned earlier that you guys see this as the beginning of a secular bull market. And I'm just curious at this point, are you still getting pushback from folks that you're talking to on that thesis? Because I know you guys were early on talking about the idea of the market, entering a new bull phase. And this is going back to last summer when that was not a popular opinion. Have people kind of accepted that now, or are there still, folks out there waiting for the next shoe to drop? I guess I should ask, waiting for the next shoe to drop in larger size than normal, because as you and I both know, plenty of bears out there all the time.
Yeah, well, first off, thanks for remembering that and mentioning that. I appreciate that. But yeah, we still get pushback. I mean, that's the truth, right? The stock market's up a lot. There's all these potential concerns. Valuations, it is what it is. Valuations are the highest they've been since the late 1990s. Earnings are coming in fast to justify it in our view. But there's always worry. There's always concern. They say the market climbs a wall of worry. I think what would scare us, Myles, is if we kept going up and everybody was jump up and down bullish. We're not quite seeing that, but there's definitely a good deal of skepticism. And look what the market's doing. The stock market's the S&P is flat for the last couple of months. But like you said, the baton's being passed around. Different leadership is kind of taking place. Look at energy. I mean, crude oil's up again today. I mean, energy's that small group that was 2% of the S&P 500 this time back in August. I don't know what it is now, 3% after the rally. It's not that much more. But there are other groups taking the baton, and that's the sign of a healthy bull market. And we don't see a problem with that.
All right. Fighting against the skepticism out there. Ryan Dietrich, always good to talk to you. LPL Financial Chief Market Strategist.